Karen Rands, today's guest, is the founder of Kugarand Capital Holdings. Combining her experience at IBM with her years managing an angel network, she leads a movement for compassionate capitalism focused on helping people become angel investors, often via crowdfunding. She'll share insights about her work and her superpower. I'm your host, Devin Thorpe. Welcome to the Superpowers for Good show, where we empower you. Karen, thank you so much for joining me for this conversation. I'm so excited to have you on the show.
Thank you so much, Devin. I'm very excited to be here too.
Well, you and I have a shared passion, common vision, I think, for the world. And so it's exciting to have you here to help me articulate, because I think you tend to be smarter, better, stronger, faster at everything than I am. So it'll be fun to have a conversation where you can help explain to the world, some of these great principles. But why don't you take a minute and just tell people about your work and your books and all that, okay? Just give us a quick intro.
Sure thing. So, my mission, my purpose, everything right now is about creating the compassionate capitalist movement. And the story behind that is when I ran an angel investor group for many years and had discovered angel investing, it's really quite by accident. After I left IBM, my job there had been to help companies be prepared to go get venture capital so they could come back and spend it with IBM. Because IBM had realized they were missing out on some of the big companies back in the 2000s. And I left IBM to go work for this company that I had been working with to help them go to market and to raise capital, and was invited to this angel investor event and walked in, and it was like, I've had clarity on it after all this time, but it was like I was walking into this secret society. That's sort of like my thing now, when I was trying to understand, why is it that so few people understand the benefits of angel investing, and in this case, crowdfunding investing. And it took me a while to unpack that. And it was because it was illegal for so long. It was legal from 1933 until really 2013. Jobs Act passed in 2012, but in 2013, so like 90 years, companies couldn't solicit for capital to a general marketplace, and investors really didn't have a way of hearing about it unless they knew another angel investor that invited them in, because the wealth managers couldn't talk about it because of fear of losing their license, because of the rules that the SEC had put in place. And so what did they do? They told them to invest in real estate and the stock market. And so we've had 90 years of this culture of doing that. And so when I was a big proponent, when I was running my angel group, that I thought the biggest challenge that most companies had in raising capital was not being able to solicit to their customers or the marketplace in general that would understand what they had. They had to go through this narrow gauntlet of an approval process to pitch to angels. And typically angels were tech companies. So if you had companies that weren't tech, they really struggled with that, right? And so when I saw on the horizon that the Jobs Act was happening, and it was right after the Great Recession. Of course, that's the reason why, they passed it, was to jumpstart our small business economy, right? And so I had sunset my angel group in anticipation of this, and to help companies understand how to go and raise capital that way, similar coaching of raising it through traditional angels, but now through a general marketplace where your message has to be even clearer, because you don't have the opportunity of having a conversation most often with the investors. And so that was, when I was rebuilding the angel group, the group that I was invited to, I ended up taking that group over and rebuilding it into being one of the most active in the Southeast, and got onto a top 50 list on Fortune magazine or something like that. And I had used training materials. Back then, ebooks were just PDFs that you emailed out to people as a magnet, a lead magnet, right? And so they would come into my database, they fill out this form, certifying they were investors. They would get this book. And so anybody that was in the physical group would have to read this book before I would let them start to invest. And I got so busy, I only wrote the first 4 chapters in the glossary on it. And it was supposed to be like a 10-chapter book. So when the Jobs Act happened, I said, okay, the worst thing that could happen to this experiment on this is for regular investors, retail investors that invest in the stock market or invest in real estate, to go out and just start investing in crowdfunded companies because of a video that they emotionally related to, but they didn't know how to go through the due diligence or do the evaluation of it, or how to build a portfolio. If they did one and done, they were done, because the odds are you're not going to get your out the park, with one company, and you have to build a balanced portfolio. So I wrote the book, Inside Secrets to Angel Investing. For those that are watching, you can see the back behind me, but it's Inside Secrets to Angel Investing is available on Amazon. It's a step-by-step primer. Would you, should you, could you be an angel investor or crowdfunding investor? And I discovered the first thing that my target market for the book was really corporate America that's making $200,000, $300,000 a year and have money in their 401k. So how do you unpack that 401k to make it available to go out and invest? Well, guess what? They were just like me when I was at IBM, and I was working at venture capital and doing all this stuff, and I had never heard of angel investing. And so it dawned on me that if I named my book How to Make Money by Investing in Entrepreneurs Before They Get Bought or Go Public and Make Money Doing It, was a really bad title, but it might have been more relatable to Inside Secrets to Angel Investing, because angel investing was a secret. So,
people didn't know they wanted to know.
No, they didn't. And it took me a little while to figure that out. And so, and then, I always and someday I'll make a course and I'll do a thing and like this. And I was kind of had the cart before the horse. I was just sort of backwards and everything. And so it took me a while to figure out how to do that, find the right people to help me do that. And so I'm in the midst of doing that now, with the goal to make people strive to want to learn how to invest in entrepreneurs the same way that they strive to learn how to invest in real estate. And when you look at the statistics, there's a huge opportunity there, because there's 70 million people that invest in the stock market, all different kinds of incomes. And there's 7 million people that have $75,000 or more a year in income that invest in real estate. But if you look at the numbers in 2022, 350,000 claim to be an angel group. So the angel groups report to the University of New Hampshire Venture Capital Research, how many members they have and stuff like that. So there's like 350,000 that do traditional angel investing. And there's 350,000 that had invested in Reg CF companies in 2022, right? 7 million real estate, right? But 350 on crowdfunding. And then there's, in between and stuff like that. So, let's say there's 1.5 million all together that are investing in entrepreneurs. Well, there's probably about 5 million accredited investors based off of W-2s that don't even think about it. And there's so many myths out there about it being risky and gambling and all that kind of stuff. And so I'm on a mission to diffuse those, eliminate those rumors and the myths about angel investing, and give people a very simple step-by-step way to get started investing in entrepreneurs and creating a balanced portfolio that will perform the way serious business angel investors do, which is 3 times as profitable as the stock and the real estate market. And so that's my thing.
That's fantastic, Karen. I'm thrilled. As you think about passionate capitalism, what does that mean to you?
Okay, so Compassionate Capitalism, my podcast is named that, the Compassionate Capitalist Show, and the Compassionate Capitalist Movement, right? So when I first discovered angel investing, first thing I started to do was interview or have meetings with the investors and find out, well, why did you get started? How'd you get started? How were you introduced to this? All that kind of stuff. And what I found was they almost to a T, they wanted to make money. That's the capitalist side, but they wanted to have impact with their money more than they would with the stock market, and not so much on the real estate, because at the time I didn't realize it was such a competitor to angel investing. But the stock market is just transaction. You're buying and selling from somebody else. You're not impacting innovation coming in a market. You're not impacting creating jobs in the economy. You're not impacting, solving a world problem, right? Whatever it is that the entrepreneurs try to do. But when you invest in the company, you get, and you do it a lot, you invest in a lot of companies, you get the benefit of the hard work of those entrepreneurs, their innovation, that feeling. This, what I found is that it fulfills a need in people that they didn't even realize, right? When you think people look around and when they get to a certain age and they're like, oh, I need some excitement in my life. I need fulfillment. Don't feel fulfilled. I feel like I got a gap, right? I don't know what it is. Well, it's because things that angel investing does, crowdfunding investing, it makes you feel like you're contributing to it, the change in society. It makes you feel like you're having an impact. And when you relate to the passion of that entrepreneur, because you share it, guess what? That's compassion. And so you're being a capitalist with compassion, because you're trying to help an entrepreneur succeed and be successful in what they're trying to do with their business. And you get to be a part of that without all the risk of being the one trying to do that.
Yeah, so true. So true. Karen, as you think about the success you've had in your career, and you've had a lot of success, a lot of impact, your IBM years, angel investing years, a book, my gosh, everything. What do you see as your superpower?
My superpower is being able to dissect a business concept or an idea or an entrepreneur, and that it has, and help them figure out a better way to get to market, or what's going to be what I call the red flag. So when I would do due diligence for the investors that I was in my group and now offer as a service, it's like the things that a lot of times, because so many investors do invest on emotion, that's like one of the things that, it's the killer of doing that. And I've been guilty of that myself. And so the idea is, do they have the ability to get all the way through to scale? And key factors is really understanding how they're going to get to market, how they're going to grow their market, and how they're going to get the money to do that. Because oftentimes entrepreneurs think that and even investors sometimes investors that are in traditional angel groups will not think about what the next round's going to be like. They just invest in the here and now and what they're doing and assume that money's going to come. And I have a thesis that says, and these angel investor groups that have this formula, part of that formula is that, they have 10 companies. The ones you may have heard it, your audience might have heard it, where, out of 10 companies, 3 are going to go belly up. 3 are just going to kind of do midland and kind of, putter along. 2 are going to do really well and make some money. And then 1 or 2 are going to hit it out of the park and make up for all the other ones, right? Well, those ones that are just, so there's 3 or 4 that are just sort of piddling along, they're muddled, they didn't get their other round of capital. And to me, like Reg A plus under the crowdfunding rules is one of the best ways for those companies to be able to raise that next round of capital that they didn't anticipate, because raising capital is not fun. And so entrepreneurs, when they finally do get that first round of capital done, they want to be like, oh, I'm just going to go work on my business because that's what I really want to do. And then when they wake up and they go, oh, I really need more money to bring out this other product, and they try to do it organically, they can't get to scale to be able to do that. And so few people, as few people know about angel investing, fewer people know about Reg A plus as an avenue to be able to get a scalable company that's making money to be able to get to that next level. And so, that's my superpower is loving entrepreneurs and being able to clear the clear the window so they can see the future that's going to work for them to fulfill their dream and build the company that they want to build.
Yeah, so true. So what a great point. And I think your superpower is really an important one in terms of being able to break this down and understand it. Uh, can you think of an example of a time when you used your superpower and got an outcome that you're proud of?
Well, so I do a lot of mentoring for entrepreneurs in different business plan competitions and things like that. And even the companies that I've advised that were coming through and raising capital. So it's been when I've had the ability to influence them on making a shift. Sometimes it's just starting out talking about their language and how they articulate their business, but then and seeing them then become successful in raising capital, and then getting to a point where they've done the pieces that they need to be able to scale, or they've pivoted how they look at their marketplace and how they're going to go after their customers. And might be realizing that they need to instead of like a direct one-on-one sale, start to work through some kind of channel influencer that can give them a one-on-many, and sort of working through some of those kind of things and understanding who their true customer is. And then how do you engage that customer and put, money in the register? Because, probably the biggest mistake that most entrepreneurs make when they're first raising capital is to say, well, if we just had X percentage of this giant market, because investors always say, how big is the market, right? And then they come up with a number and they build it to that number. They build their forecast on that. And that's not how you actually put money in the register. Money in the register comes from knowing why somebody wants to buy your product and how are they going to buy it and the time frame that it takes to do that. And so when they and if they don't understand that and don't do the work to do that, they can't be successful. They may be able to compel because they're charismatic and it's an exciting solution and stuff like that to get that initial round, but then they don't know how to actually scale that and get their cost of sales down and things like that. So, I mean, that's one, it's hard to say. I've worked with so many companies, one in particular that has figured that out. But I do get great joy out of mentoring these companies, and then they go on and they win a business plan competition and they may get some money there and they kind of get going. That's always
that's great. That's great examples. Now, quickly, we just have another minute or two. Tell us how you might coach someone to develop the skill. And I realize you could write a book about this, but and you kind of have written a book about this, but tell people, how do you do this? How do you break stuff down the way you do?
So with I have two coaching programs. I have one that's for entrepreneurs and then one that's for investors. So which one do you want me to talk about?
Well, which one relates the most to your superpower? Tell us about your superpower, right? Well, that's what we're getting at. Not your products, so your superpower.
So the way I break it down is starting with what's wrong. So when they first come in, they have to, if they, we work on the business plan, or I review the business plan and I identify the red flags. I have a 10-point, things that I look for. That sometimes it's just clarity and consistency, but sometimes it's just inaccurate, or they don't, like one thing is competition. So then we have to, we work on the gaps, right? And then try to pull it all together for them to have something that's cohesive and understandable to the potential investors. And then it's working on what's their investor avatar. So who is the most what are the characteristics of an investor that would be interested in this, so that you can figure it out how you're going to raise capital. Because it's understanding that, because when they're first raising capital, they almost always have to do what we call a friends and family round. And so then it's figuring out, because once they understand this other stuff and how they're going to raise the other capital, then they can get their language stuff that they can convince and make a person they know or person that they know who knows that other person, this small group to understand. And they have confidence, because one of the main reasons why entrepreneurs won't raise capital from friends and family and this is a red flag that traditional investors look for, is that they don't want to lose their family's money. And so, well, if that's the reason why they don't want to raise capital, well, that means that they could lose their regular investors' money. So investors always expect them to have raised some amount of money from friends and family, the people that they know, either know them as the founder or really, really dialed into the product that they're bringing to market. And so when they have the confidence to know how they're going to do all of this other stuff, now they'll go back, because I say to them, this is one of my little analogies that I use. If you believe that, it's like if you knew somebody said there's gold over there in that field, and you can get one other person, you have to dig it up within an hour in order to get it, and you can get one other person give a shovel, and the two of you can go and dig up that gold, and then it's yours. Well, are you going to go to a stranger on the street and say, come help me dig up this gold? No, you're going to go to the person that you know and that you would want to share that success with. So when you focus on success and all the elements that will contribute to the success of the company, now you can in confidence go to those folks, and you don't want to take money that they can't afford to lose, but you can go to them and say, who do you know? Right. And here's why I'm going to make money. And you could do that in confidence and not feel that you're putting them at risk. And once they gain that confidence, then that also conveys over to the other investors. So we look at the gaps, fill the gaps, get them confident in it, and then start to have them be able to have that conversation, the languaging of raising capital with the people that they know, which should be their low-hanging fruit. And then we go to the tougher ones that are the business angels.
Yeah, fantastic. Fantastic. Well, Karen, thank you so much for taking the time to be with us. Before we wrap up, just take a minute and tell people how they can learn more about what you're doing.
So the easiest way is my website is my name, KarenRands.co, no M at the end. So it's it's on the screen. It's in the thing, Karen Rands. And, there's multiple Facebook groups, LinkedIn, but on KarenRands.co, there's a opt-in that you can opt in to get my tips on raising capital and what investors are looking for, and a free ebook. It's called the 12 Secrets of Innovation and Wealth. And so I explain in my book, Inside Secrets to Angel Investing, there's 44 secrets in there, and I took 12 of them and I explain them in more detail, and I share that from a entrepreneur and an investor perspective. So, that's the way to reach me.
Fantastic. Well, Karen, thank you so much for being with us. We love what you're doing and wish you every success.
Thank you so very much, Devin. And thank you. And I love what you're doing with Super Crowd. And that's how we met. And it was a delightful thing to be a part of. And the whole community has really awakened me to so many things that different people are doing, all in the spectrum of, this direct public solicitation model. So yeah. I'm really excited to be a part of your world.
Thank you so much. Now let's do some good.
Yes.
Thank you for tuning in to the Superpowers for Good show. Twice each week, we host changemakers who share their impact, insights, and superpowers. Don't miss another episode. Subscribe today at superpowersforgood.com. That's superpowers 4 good.com. Be super empowered. Get your copy of the book, Superpowers for Good, as an ebook, audiobook, paperback, or hardcover edition via your favorite online retailer. Interested in having me speak to your company, organization, or association? Visit devinthorpe.com. Then let's talk. Now, keep using your superpowers for good. Together, we can reverse climate change, improve global health, and eradicate poverty.